folks, I'm Melly Little and this is your daily TA Wrap. Where we take a look at these markets and we do it from a neoclassical perspective, asking ourselves each time what happened today and what might it tell us about the coming ones. I do this show 4 times a week, Monday through Thursday, live at 9 o'clock Eastern Time here from the base of what is a beautiful Rocky Mountains. Folks, I'm glad you took the time to join me, especially those of you live. I know there's a lot of viewers that watch it out of hours on YouTube. Also here on the site, you can get it here. Live streaming, of course, is where you're at, but all channels, you pop over there, you can get the streaming archives from live stream, or, of course, you can pop over to YouTube on the channel TA Today. As far as today, what did we do? Well, you know, it's a broken record, but they keep playing the same song. We had a big, nice pop up again. The industrials 181 higher, 16,437. That's a little over 1%. S&P's up about the same, 1872. 2022 was the move. Composite 71 higher, 4183, 4184 on the close. NDX 62 and a quarter, 3600 and a half. Russell 15.75 almost. 11,060 almost. As you can see here, percentage-wise, the big two movers, what were they? Well, they were the ones that, they've been most beaten down, right? So the money is piling back into those high flyers, the big cap techs that have been sold off. Elsewhere, gold was down. It was down about 4 today. It's down 1.5 after hours. We had bonds down about almost half a point. The dollar was a little bit weaker again, another 1/3%. The silver market also was down. Oil was, I think it was slightly up. It is down after hours. Copper looks pretty flat here. So, market-wise, what are they doing? Well, folks, I've seen this story so many times that I'm almost afraid to talk about it. And that is that every time you think this market's going to sell off and stay down, something happens and it comes back up. S&P's flop back up, pretty good move, not much volume. But the volume doesn't mean anything at this point. What moved it today? Well, it was the Fed. We had Fed minutes. Those Fed minutes, we were trading down here all day until the Fed minutes came out. And then we more than doubled that by the end of the day. Off those Fed minutes, they came out at noon, my time, 2 o'clock Eastern time, right here. As soon as they come out, this thing skyrockets higher, never looks back, right, and then climbs the rest of the day. ABCD structures in place today, in particular the one here at the end. Nice big spike up, down, and back up ABCs. Still got a little bit more to go in the projection. Probably get that tomorrow. I want to talk for a second about the Fed, and what is the Fed? Where do they come from? What are they supposed to do? What's their purpose? It used to be kind of an easy story in that, the Fed was created as a lender of last resort. That was what it was sold to Congress as back in 1913, after the bankers got together and drafted up the plans on Jekyll Island. And if you've never read the book, it's the monster or the creature from Jekyll Island. It's a great book. It's about 600 pages long. It's a good read, and a little bit repetitive. 600 pages. I don't know how you can not be repetitive, but just the whole story of how it all came about, how the Federal Reserve was crafted and came about. It's the third incarnation of a central bank. We've gotten rid of them twice. I suspect this one will be gotten rid of again at some point, because beyond this last resort, lender of last resort, their distortions are so great, and their ability to forecast the future is ridiculously bad. And so to somehow think that we put all of our eggs into their basket and believe that they're somehow going to guide us to prosperity is a misnomer. I mean, it's just not reality, right? It's not going to happen. That original lender of last resort eventually morphed into this dual mandate that they always talking about between inflation and employment, which, are competing interests, so to speak. And it used to be that they used interest rates to do that, right? The discount rate in particular. They'd move the discount rate up and down, that type of stuff. They've had the discount rate at zero basically for 5 years now, right? People don't want to borrow because people don't see a reason to borrow. People are the ones that make the economic decisions. Yeah, they can force us out to walk that plank, to make us jump overboard into a shark-infested water because we see no better alternatives. But folks, that just causes distortions, right? It's going to cause distortions. It's not. There's an ideal in capitalism that money will seek those places where it's most profitable, and that is the whole germ of the capitalistic idea. In other words, if I see that there's no drugstores on the corners and there's a demand for them, I'll put a drugstore on the corner. Well, if the Fed manipulates interest rates to force more and more and more drugstores on the corners when we don't need any more, right? That's a misallocation of capital, and it never is a good thing. And I'm sure a lot of you already know what I'm saying, but, that whole, it's a planned economy when you're doing that, right? Didn't we defeat the Soviet Union because they had a planned economy? Wasn't that the whole reason that they collapsed? It was a number of things, but it was a major thing, right? Economics rules in the end. And you can't plan an economy. You can't have 12 people deciding what interest rates should be and get it right all the time. It just doesn't happen. So I'm sorry to go off on this tangent, but I see this kind of activity, and it's clear. It's clear that the Fed is targeting, right, the market. There's no way they can't be targeting the market to force it higher and higher, because that is a tool now, just like interest rates was a tool, right? And that itself is a problem, right? Markets are supposed to be free and unfettered exchanges. If they're not, if they're manipulated, right, that brings them down to another level, and they lose their effectiveness of what their function is. At this point, you've got to think 5 years, 0% interest. What are we going to do when a recession comes? Oh, I forgot. We have quantitative easing now, right? We got this huge tool chest that Uncle Ben used to tell us about, right? We got all these little tools we can do, right, to manipulate things more and to somehow make things better as a result. Let the free markets decide. For God's sake, let the markets decide where money should go. Quit forcing it down the drain, right? You're going to plug the whole drain up, and you're going to back up the sewage system on the whole system, right? And we're all going to be living in the filth. For God's sake. Yeah, I get sick of it. I'm sorry, but I usually don't get on the soapbox, but when I see this kind of action over and over, it just, it's like unending. And it's like at some point, you got to stop the manipulation. I know you want it to be better. I know you want, lending to happen. I know all these things, Fed. But this manipulation that's going on is going to bite. It's going to bite bad at some point. Of course, we're here for the shorter term, because if we stay right on the shorter term, we'll be fine on the longer term. So let's get back to what we're here for, and I'll get off my soapbox. All right, you got 3 ranges. Remember, we've had 3 ranges. There was one here, one up here, and actually I drew it a little bit tall. Let's do it again. So we had the lower range that was basically in this area. We had the middle range that was in that area, and as you can see, we're right up to it. And then you kind of had the upper guy that was up above it now. So at this point, right, S&P's right back up to the top, right across that big bar in the middle at the top of the middle range. No real volume today, but it doesn't matter until it tests something. It got over what I thought would stop it. So from that perspective, this looks stronger than I expected, especially 2 days into the run. Doesn't mean it's going to continue higher, doesn't mean it's going to fall back. In fact, this isn't the chart to be looking at to make that decision. The chart that I talked about last night was the Russell, and I believe the Russell is the one that's going to tell us what's going to happen. And it looks like it's going to tell us this week, because the Russell is the only one that's really doing the test, and the test is the retest regen off this low. And as you can see, this chart looks a lot different than the S&Ps. This retest regen, it's trying to get over it. It tests almost into the top today, just missed it, I believe. Let me see. 1161.09 got to 1160.42. Going to do the test tomorrow. You got 373 on that one. You're coming into it with 330. So you're coming into it lighter volume. That generally would tell you it's going to fail. And if you go back over here, you can see that swing point low is right above it. That's where that resistance zone is coming from. That little tiny sliver of red you see there. And then, of course, that goes all the way back to this January 24th bar, which was a wide price spread, high volume bar. And that's going to be, that should be the stuff that turns this back. I mean, that if I'm a seller, this is where I want to sell, right? And we'll see if supply shows up or not. That will be the test. It probably hits tomorrow, may repeat on Friday, but the Russell's the one I would be paying attention to. NDX popped back up. Now the NDX was coming back into this bar from February 13th. Volume there is 22.4. You're doing 19.5 into it. High here today is 3602.35. The low there was 3600. Where did we close? 3644. That low was 3686. So you tested into it, lighter volume, and you failed. That is a failure. But if you look at the broader NASDAQ, right, you get outside of the more narrow NDX, this is the more important one in my mind. This one actually got into that same bar and held it on less volume. Now it's going into the next big test for it, which is this big bar down. Remember, we've had two big spikes down off the top. The two that have taken place, this one here, right, those two bars. So you go up, you fly down, right, and then these two bars. This was the Friday employment number. I've forgotten what that one was. But the Friday employment number reversal, and then you got an ugly day down on Friday. Big wide price spread bar. Now, these things can come all the way back to the top, but as I said last night, I didn't expect it to. Right now, with the S&Ps acting like they do, maybe they're going to take us up there, and we'll see from the Russell. But this is the next test here. So as you can see, the real tests are just like, a few points away. We should see them tomorrow after this spike today. If I walk over and I look at most of these sectors, almost every one of them looks the same. I kind of flipped through these before I came on the air. Almost every one of them got bounces back up into the middles of the range of the past 4 days. Past 2 days. So if you take, and you can do this yourself, if you take the last two bars here, in other words, the big bar down Friday, the big bar down Monday, right? Almost every one of them are halfway into it. Is that good? Is that bad? Well, that's potentially bad or potentially good, depending on how you want to look at it. I suspect it's potentially bad, but we won't know that until we see those tests that we were just talking about. The potentially bad is that it could be setting up ABCD structures down, and that's true here. It's true on the NDX, on the IXIC, on the S&P, all of them, right? They're all potentially setting up B points on the ABCD structure to the downside, right? And it doesn't matter which one I look at. They all look the same. Here's the XLF. Same sort of thing, almost up to the same point. XLE was the strongest one. Where is it at? Right in the same spot. Just go down the list. They're all doing almost exactly the same dance on the way back up. they're going to fail is probably in here, right? This is, I didn't do the measurement. A lot of people like to do the fib numbers, and that's about a 50% retracement on the fib numbers. Fib numbers, most people say 68, right? You got your golden mean at the 30.32, the 0.68, and the 0.50. This is about 0.50. 0.68 is about the top of the resistance zone on this particular chart. And they're all doing the same thing. I went over and looked at the bonds. The bonds tried to sell off, and they did sell off today, but it's a little doji, and for all I know, that's a little ABCD structure up. Now, the bonds did test in. I believe they got to it yesterday, 47, and that was 34. So the bonds tested into and got over that high volume high. And this, the reason I keep looking at this is because of the wide price spread, high volume. Right? That becomes an important bar when you see both of those things line up on it. And so that high volume, wide price spread bar has served as, a good measure of the work that has been done. The other piece of it, of course, is the other half of the range below it. But that test up there failed, didn't have the volume, comes back. This doesn't look bad yet. It would look bad if it actually fails and comes back deeper, but for all I can tell, it wants to go back up and test the next high. And so the bonds to me still look like they're trying to build to go higher. If that's true, this market's probably going to see a flight to safety because I see no other reason for the bonds to go to new highs. Gold and the bonds were hurt today, and actually we could look at that. I didn't look at this, but I suspect they got hit on the Fed announcement. Let's see if they'll draw here real quick. Yeah, well, they spiked up and then they came back down. So actually on the Fed announcement, they didn't do, well, they sold off initially, spiked back up, and then sold off again. So yeah, it did affect them. Gold was the other one I was going to look at. Gold was selling down, right? And then gold flipped around on the Fed announcement because lo and behold, the Fed announcement was read as easy money. And I didn't even talk about what the announcement, it wasn't an announcement, it was the minutes. Those minutes basically, and this is another problem, right? And I'll step back on the soapbox for 1 minute, bear with me. We used to not have Fed speakers, right? Now you got Fed speakers like all the time. I mean, it's like every week there's 3 or 4 of them flapping their jaws. I mean, I guess I need to, I've never done the homework, but I wonder if they get paid for speaking. I'm assuming they do. Maybe that's what it is, right? Because they're out there flapping their jaws all the time. And the market is driven by the Fed. And so you got these people speaking all the time. They're not all saying the same thing, right? And they're causing this gyration. Now, worse than that, you got the Fed itself constantly changing the tune. First there's this, then there's that, then it's back to this, and then it's over to that again. And this market just gyrates on it. It's almost schizophrenic on the Fed, and the Fed doesn't have a consistent message. As a matter of fact, this whole thing of the Fed becoming less opaque, I would argue is actually worse because it gyrates the markets like crazy. And believe me, if the numbers change, the Fed, the whole tune's going to change at the Fed, and that we'll never raise rates going to change in a heartbeat. So it's not like they're telling us anything. They're reading the charts too. It's the same thing. So anyway, here we go. What's gold doing? Gold is testing into a swing point low, right? This is a retest regen, right? It's still up here trying to retest and regen into this. So far, it hasn't been able to get over it. And a retest regen just means that your trend, your break was here, you're coming back up. Now you're going to retest the place that you broke down. You can always tell where it is on the TA Today charts because you got an arrow. That tells you swing point high, swing point low, a transition. We broke something, right? We either broke over or under. This was the break. You broke 2 of them in the same area. You broke one here, you broke one there. This is the one being tested. You test a high, you test a low, and typically if you go more than 6 bars, you're not going to test very deep into it the first time, and you're going to regenerate lower. So gold here, even though it's struggling to get higher, still looks to me like it's probably going to fail here and try to regenerate lower. And I say that because your volume bars of late, right, have been spikes to the downside, and as you're spiking to the upside, you got nothing. And that is a telltale sign that demand isn't there at higher price. You can expect this to come back. Now, maybe it will just gyrate sideways in some sort of a range, build out a range, which probably would be the most bullish thing for it. And that is that, because actually, let me switch this to a weekly real quick, because the weekly is trying to build out a bottom, all right? And so if you can gyrate and hold this big bar and trade in this range for a while, which is a pretty big range, that would actually be bullish, right? Because you've got to build a bottom. These things don't happen overnight. It's going to take a year. It's going to take 8 months, 9 months, a year to build a bottom on this time frame, and then eventually turn and start running again. And I suspect that run, when it finally comes, will be because the Fed is screwed up, the economy is so bad that inflation is rampant. When it finally happens. But folks, that's a ways away. It hasn't happened yet. Bonds, I did that. The dollar got hit again. Let's see how bad this looked today. Not much volume here. It's coming back into the big bar. Test this tomorrow. We'll see what it wants to do. Gold. This going back to gold. Dollar sells off, gold can't go up. That ought to tell you something, right? It tells you not to buy gold right now. That's what it tells me. All right, we got a question over here. My man Federico, he says, good evening. May you please take a look at IRBT. IRBT, that's iRobot. Actually, a name I like and continue to pay attention to. iRobot's testing into a nice area here. I'm assuming you want to buy it, and yes, I like it here. The bad part about it is you broke 2 swing point lows, you're getting your extension, but the good thing about it is you get 2 to 3 bars extension on a swing point low break of multiple swing points. And in this particular case, that 2 to 3 bar extension so far has been just little dojis with no volume. I believe this thing's going to flip around and head back the other way. Let's see what the weekly looks like, Feedy. Yeah, same thing. I like it here. I think it's a good try. This is a high beta guy, and this guy didn't get killed. A lot of high betas got hammered. This one didn't, and that's a good sign. And maybe it's all the belief that Google's going to buy them one of these days, since they bought all the robot companies of recent. But whatever the reason, these guys actually make money. Most of the others didn't. But yeah, I like the chart. What was the other one here? Twitter? I wouldn't buy Twitter. Let's look and see what the chart looks like. Yeah, there's no way I'd touch this thing. So I don't know if you're wanting to buy it or short it. I wouldn't touch it either way. Let's see what the weekly is. Yeah, this is a mess. If you remember back with Facebook, let me go back to Facebook. And it's over a year old, so I'll have to go back to a monthly. Facebook came out, right? And its list price was something like, I think it was like 20, I don't remember what it was, 25 or something. We'd have to go back and look, but it was lower, right? It opened at a premium. It hung over for about two months, right? And then sold off, went deep. Made it back to almost 17. And so if you take 17, you double it, which was about where it traded the first month, right? That's a 50% haircut. Twitter's doing the same thing, right? So take the first month here on Twitter and just assume this thing's going to get cut in half. That's 40 and a half. Figure about $20. Twitter is I just would not touch this thing. You got a big high volume low here at 40.40. That's where it should bounce for. But if you're doing anything other than playing a bounce, I think you're asking for trouble. And I don't even see the bounce here. That's not a nice chart. Not something I'd play with. Okay, let me go overseas real quick because there's a couple things over there that was interesting. Let me show you FXI. This is not FXI. FX, I can't remember these keys. FCHI. This is the CAX. they couldn't move. Now, this was interesting to me because remember we came down with some decent volume. And then they flipped this thing back around, took it up a little bit today, but they couldn't do anything on it. And that volume was hitting this low right on the retest regen. It came back within 6 bars. I almost got to the bottom of it. Let me draw it in here in case you're not seeing what I'm looking at, because I know I see all this stuff without drawing anything. So it almost got back down to this bottom, right? Tested it, had pretty decent volume here compared to the bar. And certainly compared to the break, right? A lot more volume. Now today it tries to poke higher, gets over the high, back under it, and can't go. I think you're going to see Europe struggle to stay higher tonight. And I say that by looking at this chart, but in particular, that's the strongest of the big three. The other one is the DAX. And the DAX actually was weaker. So the DAX couldn't get anything going. The DAX to me looks like it wants to come lower again. And if that's true, these potentially are setting up ABCD structures to the downside too. And so I see potential ABCD structures bearish, right? Everywhere I look right now. Does it mean they're going to actualize? Well, we don't know that yet. We'll know that as soon as we see some tests fail right to the upside. And if those tests, like on the Russell, like the NDX, the IX, I see this tomorrow, if all those things, they go in there and they can't push higher, right, then that's going to be probably, it's certainly going to set up the potential for these things to actualize. So, jury's out here. I've seen so many V-shaped reversals at this point. I mean, I see 2 of them on this chart that, my hair almost stands up anymore, what hair I have left as a result of this market. And luckily at my age, I still have some. But, I've seen them so much. I'm human, folks. I can't help but think that they're going to do it again. I've seen it over and over and over, just like you. But at the same time, as I said 2 weeks ago, this sell-off looks different, it smells different, it feels different. And until they prove me wrong, I'm going to think about it different. And if that means that I miss some upside again, well, so be it. That's the way it goes. I'll make it up somewhere else. But to me, it's a lot easier to make up, what you miss out on than it is to make up what you lose. And so, you can carry that any way you want. You can trade this any way you want. And I'm not saying you go short here, but I am saying you be more careful. And I've said that for a couple of days, and I've also told you the last 2 days it's going to bounce. And I expected it to bounce, but the velocity of the bounce, no, I didn't quite expect that. And I guess I should modify my algorithms to believe anytime the Fed's got anything to do with anything, we're going to get a bigger bounce than I expect. All right, so tomorrow, what's the story here? Well, in my opinion, right, you're gonna see this market struggle tomorrow, and then I think Friday is going to be the real day. And why Friday? Well, because you got the 2 big financials, Wells Fargo. Let's see what they did today, real quick before I quit. Wells Fargo and J.P. Morgan. These are going to be the 2 the big ones, and they're still set up okay. They can still make a run, so we'll see if they trade that way or not. I saw that Bed Bath & Beyond was down about 5% after hours, and we'll see how that one trades. The big bar here, if you're in that name, 65.85 is the low. Breaks that, you got trouble in paradise on that particular issue. Folks, as always, I really appreciate you being there. You tell a friend, tell 2, turn them on to the site. I would thank you many times over for it. I grow as a result of you folks telling others about what I do, how good or bad I do, hopefully good. And again, thanks. Have a great night. Take care of yourself. I'll see you back tomorrow night. We'll have probably a pretty good indication tomorrow night of what's going on. So let's see what it looks like. Take care. Good night.